While 2021 faced its fair share of ups and downs, we know one thing to be true. The real estate market not only met expert predictions, it surpassed them, breaking records along the way. With that in mind, there's one big blaring question right now. Will the 2022 housing market continue to follow the same trajectory, or are we facing a possible downturn? Stick around till the end and I will share with you my thoughts on our Bay Area real estate market. Hey guys, my name is Mac Rogers. I'm a local real estate broker here in the Bay Area. Welcome to the channel. Let's take a deep dive into what leading real estate experts are projecting for the final quarter of 2021 and what to expect in 2022 so you have the knowledge and confidence to make your home buying and home selling decision. Quick caveat here, no one can predict the future with certainty. Things change just like this, and it's important to keep tabs on what's going on so you can take appropriate action. What I'm about to share with you is what we know right now and what experts are saying about the data. So what's the housing market forecast for the rest of 2021? You've seen it in the news: overbidding, price wars, bubble, severe inventory shortage, home selling in a couple of days. Home prices are escalating everywhere. This used to be a Bay Area phenomenon, but ever since 2020, it's been happening all over the country. Whether it's home prices, mortgage rates, or inventory, a lot of people are asking a lot of questions about what to expect in the next couple of months. Here's what experts are saying about what's going to happen with the real estate market for the rest of 2021. Interest rates are rising but projected to stay low. We are now officially addicted to super low mortgage rates. Eventually, we will go up, but it will be slower than everybody thinks. This is one of the biggest drivers for 2021's booming real estate market: record low mortgage rates. I remember when I first started in the real estate industry, I was a mortgage broker. People would tell me stories about mortgage rates in the high teens or even the 20s. Now it's hard to even fathom rates above 5%. I'm the one telling people, back in my day, interest rates used to be around 6 to 7%. Anyway, because of this, affordability reached one of the highest levels it has in the last 30 years. Naturally, eager buyers followed. Again, the good news is experts are predicting that mortgage rates will remain low for the foreseeable future. Higher than what we've had, but still lower historically. While home prices continue to appreciate across the country, the counter of the low mortgage rates means homes are still affordable to purchase, but slightly less than it was at the beginning of the year. Home sales are slowing but still strong. There's no doubting it. The last 2 years have been some of the craziest years in the history of real estate. Let me segue here for a moment and talk about the latest pending home sales number. Here are the latest pending home sales report from the National Association of Realtors for September 2021. Pending home sales dropped for September when compared to August. It dropped by 2.3% in September. Now, I have to say that even though there is a drop month to month, it's still higher when compared to previous years. When compared to September of 2019, it is still 7% higher. Now, you might ask why I'm comparing it to 2019 and not 2020, right? Well, as I have said in this channel before, 2020 is an odd year. Everything that happened last year is an anomaly, and to have a more meaningful comparison, we have to go back to 2019 and prior. By the way, if you're wondering if 2019 was a good year for real estate, the answer is yes. It was one of the best years we've had. In fact, during that time, the thinking was we are in for a slowdown because we've had so much gains in the prior years. The reason we look at current pending contracts, it's because it's a good early indicator of upcoming closing sales. I won't go through the numbers here. I'll just put a link to the description below. While experts are noticing home sales slightly slowing, that definitely doesn't mean that the market is slow. It's just returning to a more balanced one than we've had seen in the previous years. Again, you have to hear this. I can't begin to tell you how many people I meet every day and they tell me there's a slowdown and they're going to wait on the sidelines because of this. There's a difference in a slowdown and a crash. So the number of transactions are slowing down. But what about the ever important home prices? Home prices are appreciating slower too. Take note of the words that I use: appreciating slower. I didn't say prices are going down or prices are falling, and I'm certainly not saying prices are crashing. The constant battle between high buyer demand and low inventory in 2021 led to a surge in home values that left everyone scared that we were headed for another housing bubble. There's no hiding the fact that this year's home price escalation was a bit excessive. However, it was also just a result of simple economics. High buyer demand coupled with extremely low supply. As inventory starts to grow, experts anticipate price appreciation will slow. Another thing I want to share with you is that when you are seeing price reductions, there's probably going to be more price reductions this coming year as some sellers have to adjust their expectations. But again, certainly it does not signal a crash. Now let's talk about this dagger that's been dangling over our heads and most of the bears like to point out as a catalyst for the real estate market crash. And I'm talking about homeowners in forbearance. Yes, there will be people in forbearance that will lead into foreclosures. That will happen, but it won't lead to price declines. In fact, you will see the headlines that foreclosures will spike, specifically when compared to last year when we had a foreclosure moratorium. Again, don't be surprised. Foreclosure has accounted for less than 1% of the total market in the past years, and we will still remain low. The massive wave of unemployment that came along with the pandemic led many homeowners across the country to enter a mortgage forbearance. I actually believe that a majority of the homeowners that went into forbearance didn't need to go into forbearance, but was just playing it safe. While unemployment is slowly but surely declining and ahead of expectations, it will be a while before we reach the pre-COVID level. Because of this, foreclosures are expected to rise. However, experts don't anticipate this will lead to anything resembling the foreclosure crisis that we saw in 2008. They also don't expect it to lead to major home value depreciation that followed. Here's one of the biggest reasons why there won't be a massive foreclosures. Equity. Most people that are in forbearance that really cannot afford their homes anymore can actually sell their house and still walk away with money in their pockets. Homeowners who have not paid their mortgage in the last 18 months have been benefiting from last year's and this year's massive price appreciation. No one is walking away from their homes. Take a look at the following graphs that I have here. If you're a homeowner, you have gained on average $51,500 in equity since this time last year. That's the national average. Here in California, that number is $116,000. So I don't even understand how people can keep asking me this question. Is the housing market going to crash before 2021 ends? All of these leads to the question everyone has in their mind. The answer, according to top real estate experts, is a big no. While memories of the housing crash of 2008 still linger on the minds of many buyers and sellers, today's market conditions resemble nothing close to what caused it. I've been saying this a lot lately. If you told me back in 2006 or 2007 before the crash that you wanted to buy 3 properties in the next couple of months, my answer would be a resounding yes. Yes, I can get you those 3 properties just like that. Now, if you tell me you wanted to buy 3 properties in the next couple of months, I would say to you, let's pool all that money and just try to buy 1. There's simply no inventory. Home price appreciation may be high, but it's also a result of too many buyers and too few homes for sale. The forbearance situation should balance out by the large amount of equity homeowners currently have, meaning they can choose to sell rather than foreclose, like I said earlier. Plus, while affordability may be decreasing, historically speaking, it's still high compared to most other years. What does this mean for buyers and sellers for the rest of 2021? There's still a lot of motivation for buyers and sellers in the market, and that's not expected to change in the coming months. With both inventory and mortgage rates remaining low, both sides of the real estate transaction stand to benefit from making a move before the end of the year. If you are serious, this next few months up until Feb of 2022 could be your chance when there's less competition out there. Buyers tend to take a break during the holidays. My advice, don't stop. Again, while real estate may be slowing slightly across the nation, it's still strong. Waiting until next year could mean losing out on less competitive market and better affordability, the 2 big factors positively impacting buyers and sellers today. So what do we look forward to in 2022, or what are the 2022 housing market predictions? As 2021 draws to a close, again, you're hearing or probably getting told that the market is about to crash, don't buy now, etc. Ask them this: what are you basing your conclusion confusion, or where are you getting your information from? The past 2 years have been full of exciting and record-breaking moments. It's also seen its fair share of buyer fatigue, buyer hesitancy, and buyer confusion. Here's what industry experts are saying about what they anticipate for the 2022 housing market. Home prices. In the past 12 months, home price appreciation has been the topic of many headlines, and not in a good way. Speculation that we're in another housing bubble has kept many buyers and sellers hesitant, and they feel that we're headed for another crash. So what does the future hold for home prices? It's important to remember that the 2021 market was anything but normal, and that escalating home values were a direct result of record low inventory. However, experts project that the inventory situation should improve in the coming year, stabilizing price appreciation across the nation. But will home prices depreciate in 2022? Over 100 industry experts don't think so. Instead, they are projecting a more modest appreciation of 5.2% in the next 12 months compared to 11.74% increase seen in 2021. I made a video about one projection that is actually more than double that 5.82% for the next year, which I find very interesting. Check that video out. Goldman Sachs is actually forecasting 2022 to be up by as much as 16%. Think about that for a moment. Another 16%. Mortgage rates. In case you didn't know, the past year saw the lowest mortgage rates in the history of real estate. So, if you're one of those who are waiting for those rates to come back down or go down some more, you may be waiting for a very long time. What's important to remember is that while homes right now may be less affordable than they were a year ago, they're still extremely affordable. If you look at the 30-year mortgage rate tracked by Freddie Mac, we can see the average rates by decade. The 70s, almost 9%. The 80s, almost 13%. The 90s, back to 8%. The 2000s, 6%. The 2010s, 4%. While experts don't project that mortgage rates will rise a huge amount, any increase would mean an increase in monthly mortgage payment. A couple of decimal points may not seem like a lot to most people, but it could make or break someone's budget. If you are a buyer and you are playing the waiting game, the best advice I can give you is that a rise in mortgage rates coupled with continued increase in home price appreciation only means one thing: paying more for the same house that you buy now. Housing inventory. Inventory has been without a doubt the biggest player in the real estate market we've experienced in the last 2 years. With buyer fatigue running high, I keep getting asked, will the housing inventory increase in 2022? The good news is that there are many factors that lead industry experts to anticipate a rise in homes for sale. Here's why. Homeowners may be more confident putting their homes on the market as COVID numbers continue to drop and more people become vaccinated. This is true when we first entered the lockdown and the pandemic. A lot of sellers changed their minds. As we get a better understanding and control of this pandemic, more sellers are starting to come on the market. Also, the many obstacles slowing new construction, they are starting to fade away and new homes are coming on the market. This is adding new inventory and meeting the needs of a growing population. As forbearance comes to a close, experts predict a wave of new homes coming to the market. However, they don't anticipate the majority of these to be foreclosures. Instead, like I said earlier, because of the built-up equity, homeowners in this position will have the opportunity to sell instead. While more inventory may take up a bit of the edge of today's competitive market, it's important to note that it doesn't mean that prices will fall or homes will become more affordable. There will just be more available to choose from. Now, for my Bay Area people, unfortunately for us, we will continue on with this trend of lack of inventory and bidding wars. This was how the market was before the pandemic, and I see it continuing into 2022. If you're looking for deals, you need to go outside the major cities like San Francisco and San Jose. I'm talking about an hour or two away. Places like Fairfield, Vallejo, or Mountain House, Tracy, or Gilroy, and beyond those places. I'm not saying they will be cheap or you won't have competition. It's just a little bit less expensive, you get a little bit more, and in some cases, less competition as well. Here's another top tip for you. If you don't like competition, go buy brand new homes. So the bottom line, if we've learned anything in the past couple of years, is that while we can project the future, we can't really predict it. While industry experts don't expect the 2022 housing market to be as crazy as 2020 or 2021, it's important to stay on top of the latest insights to make sure you're always aware and you can make informed decisions. Which, by the way, if you like that, please consider subscribing. I give weekly real estate updates both for my local real estate market as well as the national real estate market. Basically anything real estate related. So there you go. That's what's in store for the rest of the year in 2022. What do you think will happen? I'd like to read your comments below. Thanks for watching and have a great day.